subtleties to the entries and exits. I believe it was recorded, Michael, and as soon as I have it ready, um, I'll make sure I post the link for it. All right. And I am in the process of creating the Word documents for these lessons. I'm going back over the recorded lessons and kind of covering my bases. Hey, Daryl. Okay, thanks a lot. I believe that's a link to yesterday, and it may be to the other 3 or 4 lessons that we did also. Okay, someone's trying to speak. Who's that? Is that you, Phil? Okay, Daryl is saying that it's not ready yet, yesterday's lesson. That's okay. Phil, are you trying to speak? I'm not sure. It looks as if you're trying to say something or your microphone is on. Okay, Phil, your voice is way in the background if you're speaking. I just want you to know that. If you're trying to speak, your voice is very tiny and way, way off in the distance. Yeah, John, I hear someone talking also. I'm just not sure where it's coming from. But I'm going to move on with a brief summary, and there's a pattern here that I really want you guys to see. As you know, oh, I see he's not at the computer, but his mic is on. That's probably the case. All right. Um, Normally, as you guys know, I let you pick the time frame and you pick the pair. This way you could see that what I'm showing you works every place. So I'm not hand picking charts, like a lot of other people do. Today, just for this first few minutes, I'm going to hand pick a chart because is it's got a few things on it that will help me with some of the explanations today. And then after this brief review, we'll move on to some other things. As you can see, we are in a downtrend here, okay? If I were to ask myself, where am I in current price action? Which one of the building blocks am I in at the moment? Can anybody look at this chart and give me an educated analysis? Okay, Mike, yep, we're in consolidation. Yes, John? Daryl, consolidation, very good. Now let me ask an A+ question. What kind of consolidation do you see at the moment? I see Mark is typing also. Very good, Michael. Very good, Daryl. Excellent. So we are in a downtrend, and we are in a consolidating market, and the kind of consolidation is a wedge. Excellent, Michael and Daryl. That's excellent. Could everybody else see that? Phil 919. Yeah, I wouldn't concentrate so much on it being a falling wedge, as it is just essentially a wedge, and it's not a flag pattern. Phil 919. All right. Jose is typing also. I just want to get as many answers in as possible. And for you guys that are just sitting there lurking in the background, Bull Hamster, Dave S., George. Okay. Jose is saying he's new. That's okay, Jose. We'll get you up to speed as time goes on. Aptera. Okay, I'm just trying to get some of these other people in here to participate. We get a lot of lurkers. Kavi. I see Oz is here. Phil, Joe's guy. Raul, I believe, is new. I see Rich. I see Rob Rice. Hey, Rob. Robert, Ron, Sean, Smidos, and Willie. All right, so when I ask questions, it's helpful to me if you give some sort of response, so I know that you're following this. All right. So now I'm going to move on with this. I'm going to draw the wedge, and this is the wedge that I would draw right here. Okay, everybody see that? Or I could even use this one. All right, that doesn't make that much of a difference. But you can see we are in a down market, and now we have made a wedge. Okay? Now, one thing I want to point out at the moment is the fastest way to spot a wedge. Because the faster you spot it, the faster you'll be able to take advantage of it. Okay? In a downtrend, we know that we need short candles, which we have. We know in a downtrend, we need pullback candles. So remember, if you had to build a downtrend and you had a box of candles, different candles in a box, and someone said, build me a downtrend, you would need short candles, candles that close lower than where they open, and you need pullback candles to create the pullbacks in the down market. So you see we have our thrust down, and we have our pullback right here. Then we have our second thrust down, and we have another pullback right here. We also have a small pullback here. Then we have another thrust down, and then we have another pullback right here. So in a downtrend, you need a push down in the major direction, or an impulse move, or a drive move, or a short move, and you need a pullback. All right? Pullbacks are constructed of what I call pullback candles. What is a pullback candle? A pullback candle is the first time we have a candle that makes a low that's higher than the previous low. And I want to blow this up. Oh, let me turn this off. I want to blow this up, and let me get rid of these trend lines. Pullback candle is the first time we have a low, this candle, that has a higher low than the prior candle. As soon as we see that, that's a tip-off that we could be entering a pullback. And our response to that is to just put a trend line across these two. We can't see this spinning top when that happens. So we don't know it's there. Do you guys follow that? And for Matt, if he's here, I know that this is not perfectly touching the bottom of this wick. Okay, I'm just drawing the lines in quickly just so we can get to the heart of things. This is more where it would be. So if I miss it a little bit, don't beat me up. All right? So that's a pullback candle. That's one of the things you need to pull out of your box of candles in order to build a downtrend. So here we go down again, and here we have a low, and this is the first time in these four candles. This one is the first time in those four candles where this low is higher than the previous low. What we do at that point is we put a trend line through it. All right, everybody understand that? And then we have another push down, and then 1, 2, 3. This is the first time in these three candles that we have a low that's higher than the prior candle's low. That's an indication that we could be in the middle of a pullback. And again, we have 1, 2, 3, 4 candles down, and we have a low that's higher than the prior candle's low. And that's indicative of a pullback. Okay? We also learned yesterday that each of these thrusts generally will equal the next thrust. So this is our first thrust down, and it's roughly 160 pips. Let's call it 150. Okay? After we break this trend line and we begin the second push, that second push should give us about 150 pips, which this one did. Okay? And now here we have another pullback here. And ideally, this pullback should give us about the same as the other ones, about 150 pips. Does everybody see that? That's a very measurable thing. All right? So once we pick a direction, once we break this trend line, we can reasonably assume, because of historic data, that the second and third thrust would be relatively close to the first one. And by the way, as I mentioned, when I have this projection out here, I'm always going to come up about 2 or 3% from the bottom, and that take profit. All right, because the market doesn't always move dead on exactly to the pit. We're not talking about an ideal world here. Okay. Now, someone mentioned a price trap. Yes, you're absolutely right. There is a price trap in there, but I'm not talking about that at the moment. Now, keep in mind, for those that are new here, my definition, Uncle Lou's definition of price action is the natural movement of the market made up of consistent, repeatable patterns. As you can see, this push down, pull back, push down, pull back, push down, pull back, push down, pull back. It's consistent and it's repeatable. What we're trying to do is learn how to spot as many consistent, repeatable patterns as possible and then take advantage of it. Okay? In an uptrend, let me just see if I can find a decent uptrend. Okay, this is not ideal, but I'll use it for the moment. As you can see, in an uptrend, we have very much the same thing, just upside down. We have our push up and we have our pullback. Our push up, if I had to build an uptrend, I would need long candles, candles that close higher than when they start. And I need pullback candles. And as we know, our definition of a pullback candle is when we have a candle wick, and now we're in an uptrend now, we have the first time when a candle wick is lower than the previous candle's high. All right, so in that case, what we do is we draw our trend line here. Okay, remember, we can't see any of this. All right, here again, we have a drive up and a pullback. And what we're looking for is that first time we get a lower candle wick lower than the prior one, and then that's our trend line. Okay, then we have another push up. And we have another, oh, doo-doo. I don't know what I did there. Okay, here we go. A push up and then another pullback. So now my point, I'm just going to draw these in quickly just so you can see the idea. In the downtrend, we had a consistent, repeatable pattern. Here in this uptrend, again, we have a consistent, repeatable pattern. A drive up, a pullback, a drive up, a pullback. We're looking to spot these as quickly as we can and take advantage of them. All right. Also, I'll point out that our initial push up was 90 pips, let's say. Wait, let me just, okay. I want to round it off. Let's call it 85 pips. I know it says 90, but let's call it 85. So after this trend line break, we should get about 85, and we did. After this trend line break, we should get 85, and we did up to here. After this trend line break, we should get 85 up to here, and we did. After this trend line break, we should get 85, and we did up to here. Consistent and repeatable, consistent and repeatable. Okay? Now, when all of this push up, pull back is over, and the market is about to change, we will usually get some kind of consolidation. And the consolidation can show itself in a couple of forms. The two forms we talked about yesterday was a sideways consolidating market, or a price trap, and a triangle. All right? So now I'm going to come back to this chart, and I want you to see how to spot triangles quickly. In a downtrend, we get the thrust down and the pullback. Once we close below this first low right here, that's a signal that this downtrend is probably going to continue because we closed below this low. I don't mean a candle wick, I mean a close. All right? And then we have another thrust down and then another pullback. Once we close below this low, and that happens on this candle, that's more evidence that the downtrend is going to continue. And then we have this low and then a pullback here, the one candle. But once this candle closes below that low, we know that this downtrend is in effect. When this market is about to change, that scenario will no longer be evident. So on this final thrust down, we have our pullback, and then we have a push back in the direction of the trend. This pullback, in order for this downtrend to continue, this pullback must close below that low. If it does not, that's an indication that this downtrend is cooked. It's done. Stick a fork in it. All right, everybody understand that? Once this pattern of successive lower lows comes to an end, that's an indication that the market is about to change. So now we have the push up and the pullback. We did not make a new low. But in order to call this an uptrend, then this push up should have closed above these highs. Do you understand that? We had the pullback, it failed to make a new low, and then the new thrust failed to make a new high. So anytime you can't make a new low and you can't make a new high, that is a dead tip-off that you are going to create a wedge. And if you look at how a wedge is constructed, a wedge has a hard time making a new low and a new high the entire time it's in existence. Do you understand what I'm saying? Like, you see these candles here all traded below this low, but nothing closed below this low. Let me put a line here. You see that low? Let me move this up so we can make Matt happy. Nothing closed below that low. So we couldn't make a new low, and then on the thrust up, we couldn't make a new high. That's indicative of all wedges. Where you cannot make a new high and you cannot make a new low, you're going to form a wedge. A wedge is one type of reversal pattern. And when we get down the road, when we talk about the 4 kinds of support and resistance, you'll be looking for areas on the chart where the wedge formed that give you a high probability of being a reversal signal. And there's also one particular oscillator that works very, very well in defining wedge breakouts. And I won't get into indicators right now. I want you guys to be able to look at a naked chart with no indicators on it, no nothing on it, and be able to understand where you are. Calzone is how many pips on the next leg, up or down? I'll get to that in a second. Okay? The other reason why I'm really trying to focus on price action purely is so that you can really see what the market is doing. All indicators are built off of information from price. So the indicator can't give you the new update, the new line, the new dot, the new wiggle, the new squiggle until it gets the information from the closed candle. So all indicators are always going to lag. And there is nothing, absolutely nothing faster than price. There is nothing more accurate than price. Okay? One of my, I was teaching in Manhattan a couple of years back, and with the group I had, in doing our trading plan, one of the things in the trading plan, the way we designed it, was you had to have a phrase or saying or a quip or a quote that helped you get in the right state of mind for trading. And one of the students said, her quote was, "The market always moves in the right direction." And I thought that was great. And I asked her where she got it. And she said, I told it to her. And I don't even remember saying it. So sometimes, and this is important, I'm saying this to you guys, if I say something that makes sense or is a good concept for you to grab, let me know, because I'll try to highlight it in my written material. Okay? So the other issue with price is that this chart will never move in the wrong direction. It will probably move in a direction you don't want it to from time to time, but it's never, ever wrong. So if the chart is never wrong, why bother looking at anything else first? First, look at the chart, understand where you are in the overall scheme of price action, and then figure out if you're going to trade it or not trade it. And if you are going to trade it, what's your method? What's your entry? What's your exit? What's your target? Okay. So again, this is indicative of all wedges, right? That they can't make a new high, can't make a new low, and price gets squeezed all the way up here to the apex, and then price breaks out. The general target for a wedge is a distance equal to the back of the wedge. So in this case, to answer Calzone's question, we measure the back of the wedge like this, and then we can project that price to the high side, and we can project that price to the low side. Okay? There are several types of entries that you could use. But once this wedge breaks, this generally would be your safest profit target. And one interesting feature with MetaTrader 4 that I like is when you make these trend lines, it gives you that center dot that you can grab and move it back and forward. That center dot could also be a pretty decent place to take half your trade off. You know what I'm saying? So you've got like a built-in mini take profit point right there. Or you could take your whole trade off right there. I think next week, the way I have things laid out, we're going to go into exits. Yeah, John, have you gone into targets? I'm not sure what you're asking me there, John. He says, have you gone into targets? And I don't know what that relates to. Okay. Sometime next week, we're going to do 2 days on exits only. Only exits, because getting in a trade is a very easy thing. Anybody can hit a mouse. You can get your kid, your daughter, your dog, put a mouse in front of it. The dog will eventually slap the mouse and you'll be in a trade. The exits are what kills traders, because they don't know how to get out. They don't know when to get out. They never plan on it, that sort of thing. All right. John, on this wedge, I'm not sure how many of my lessons you've seen, John, but on every formation and every pattern I show you how to project a take profit. I show you how to project an entry. I show you 3 different types of entries: an aggressive entry, a moderate entry, and a conservative entry. It's easy to profit with random entries and good exits. Absolutely, positively not, Phil. Because random means that you can change it anytime you want in your brain. And as long as you have a structure that you can change in your brain anytime, you're going to do that with everything else. So you'll end up never having a hard, fast rule that you can rely on, or having a hard, fast rule that you can effectively backtest. Because if it's random, hey, it's Thursday, let's do it this way. It's Wednesday morning, let's do it that way. You know what I'm saying? Initially, in the beginning, hard, fast rules are really important for a new trader. Once you become comfortable, once you get more experience under your belt, yes, you can certainly make judgment calls. Okay? But I would not tell a new trader it's easy to profit with a random entries and good exits. Because random entries could end up going against you, and then you'd have to figure out how to hedge the trade and get out of it with money. Okay? So just in general, the back of the wedge, that distance will be pretty much what you'd be looking for once the wedge breaks. The other thing with the wedge, if I had a box of candles and I said, build me a wedge, what you would need... Okay, I have one other question from Ron. Could you please take a look at the 5-minute Chef Yen wedge during the London session and how to trade it? No, Ron, I will not. I'm not going to jump all over the place. And if I do it for one person, then the next person comes in and they think that it'll be that way for everybody. We will get to it eventually, but not right now. Okay? And I'm not talking about trading wedges. I'm talking about how to recognize them for right now. Once we get into the trading methods, then I'll get into detail on trading the wedges. Okay? But I don't want to get off that because it takes about a half hour to go through all the different possibilities. So understood that this is the fastest way to spot a wedge is look for a situation in the market where the market can't make a new high, all right, and can't make a new low. See that? We could not make a new low, and yet when we made the push up, we could not make a new high. That's a giveaway that you're about to get into a wedge. Okay? And the breakout of the wedge, once it breaks out, it should move a distance equal to the back of the wedge. If I had to build a wedge, if I gave a child a box of different size candles and said, build a wedge, what you'd be looking for is like the largest candle at the back of the wedge, probably this guy right here. And why won't my mouse, whoa, why my crosshair is not working? Oh, there it is, okay. You look at the largest candle near the back of the wedge. In this case, I would call it this one. This candle was 35 pips from open to close. This is important in a wedge. The wicks aren't important. It's the candle bodies, okay? This candle at the back of the wedge was 35 pips. In order to build a successful wedge, what will happen is almost none of the other candles in that wedge will be 35 pips wide from open to close. Because as we get closer to the apex, there's not much room left for a 35 pip candle. Do you see that? All right, so as we get closer to the apex of the wedge, the candles tend to get smaller and smaller and smaller until we actually have a breakout. You with me on that? So the easiest way to spot a wedge is to look for an area on the chart, especially after a long trend in one direction or the other. Especially after that, what you're looking for are price traps or wedges. Price traps we know how to spot in 3 candles. We can spot a price trap. Now, for those that weren't here yesterday, here is a price trap. This is another repeatable formation. Over and over and over again, you'll see it. Okay? I'm on a 1-hour chart. I'm on a 1-hour chart. John, Raul, I'm on a Euro New Zealand 1-hour chart. It's kind of where we left off yesterday. But when I opened the chart, I saw this wedge, and I just wanted to point it out, that this is one of the trend reversal patterns, would be a wedge that happens at a logical spot on the chart. Okay? Now, the other chart pattern that we talked about yesterday that was repeatable and measurable and consistent is this price trap. What a price trap is, if I had to build a price trap, I would need one candle that's followed by 2 consecutive candles that cannot close above the high of the first candle and cannot close below the low of the first candle. This is very, very important. It cannot close above this high or below that low. And you'll see that on this 1-hour chart, for 1, 2, 3, 4, 5 hours, we were locked up in this box. Okay? This is a very repeatable pattern. You need 2 candles following that first initial candle. And actually, this could be a price trap also, this large, long-legged doji. Okay? Either one of these could be. But if, as I mentioned yesterday, if we have this, let me get rid of these lines. If we have, let's say we take this large candle as our price trap. Okay? If during the course of this price trap we end up making a smaller one, as we did with this candle, then we bring our price trap down to the smaller candle. All right, you understand that? And if we made an even smaller candle, we would bring it down even more, which we did. This is kind of borderline. But I'm going to leave it right here for now because it's easier to explain. All right? So that's a price trap. One candle followed by 2 candles that cannot close above the high or low of the prior candle. This is a very repeatable, very measurable, very accurate pattern as long as it occurs at a logical place on the chart. Our projected profit target for a price trap is 2 times the size of the trap. So I'll draw this, and I'll put one here for an entry, and then duplicate another one down here, and you see that we got 2 times the width of this box. Okay? And again, every price trap is not tradable. It's very, very important to pay attention to as to where the price trap occurs. As we discussed over the last few days, when we have a downtrend or an uptrend, a new one, we will usually get 3 pushes down. So this is push number 1. This is push number 2 in here, and this is push number 3. We get those 3 that are relatively reliable. Sometimes they go a 4th push down. I personally don't go short after the 3rd one because I'm not trying to chase the market. I'm not trying to guess. And there are plenty of other pairs that may have better setups. So don't get married to one chart. Don't get married to one pair unless you want to specialize and only trade that pair and that pair only. You follow me? Always look for the chart that's got the easiest possible thing for you to read. That's important. Go to the chart that's got the easiest possible setup for you to read. So, if I look at this price trap, where did it occur? Well, it occurred basically in the middle of the second wave down. And since the odds are very, very much in my favor that I'm going to get a 3rd wave down, my bias on this is that it will be short, and I will look to trade it short. Okay? The trade entry can be a break of this box. It can either be a close below the box, which we have here, and if I duplicate my line here to the close, you'll see that we did get twice the distance of the box. All right, even though that entry was way out of the box, you may think it used up a lot, but remember, we've got 3 pushes down, and this occurred in the middle of the second push. All right, does everyone understand that? Just give me a yes or a no, and if I need to touch on something. All right, I'm trying to keep this very, very simple. Trading does not have to be complicated. All right, it's where this happened. I'll give you another clue concerning the support and resistance classes when we get to those. Is if you look at where this box started, the top of this box, if I go back into the past, you'll see that the top of this box started right here at all of these taps. That's another clue. All right? But when we get to support and resistance, we'll get into that later. Now, Rob is saying, would you go in heavy on that particular one? Sometimes I will, sometimes I won't, Rob. It depends on how much of my equity I've used up already. It depends on what my daily trading budget is. You know, and I work on a trading budget. I often talk about shopping, and I use an analogy. They tease me about it because I use an analogy of shopping for melons. If you go to the store and you pick up a melon, you don't just pick it up and throw it in your bag. You pick it up, you look at it, you squeeze it, you sniff it, you look at the color, you know, you bounce it around a little bit, you pat it, and if it meets all of those little tests of yours, then you decide to buy it. I look at a trade the same way. When I place a trade, what I'm actually doing is I am buying a position. So I'm going to give that position I'm thinking of buying the same sort of look. I'm going to pick it up. I'm going to look at it. I'm going to sniff it. I'm going to look at the color, look at the texture. The same thing goes into a trade. Before I put my money on it, it's got to pass all those tests. You follow me? Once it does that, then I'll buy it. So I use that same analogy with trading. You know, this really has to I like this. I like the way this looks. So this happened in the second thrust down. And I'm very confident I'll get a 3rd because most uptrends and downtrends will give you most uptrends and downtrends will give you 3 thrusts or drive moves that are relatively equal in length. Add to that the fact that this box, the top of the box, occurred right here at a major place that used to be support. And now we come through that support, and now support, as those of you more advanced will know, this was the floor. You see the ball bounced off the floor, bounced off the floor, bounced off the floor, bounced off the floor, took off. It came back, bounced off the floor again, and then this time it broke through the floor, and now the floor became the ceiling. We hit the ceiling, close below it. Hit the ceiling, close below it. Tried to get up to the ceiling, never made it. So that combination of the two things gives me high confidence in this particular trade. And like I said, we'll get into the support and resistance aspect of it later. Okay? Again, consistent and repeatable. I just want to show you that the price trap is repeatable. Here's another price trap. See that? We've got this candle, and the next two could not close above this high, could not close below that low. You see that? Now, this particular one may not have worked out because I see we came all the way back here and got popped, but that happens in trading. You know, no one system or method is 1,001%. And I don't know if I would have taken this based on this other stuff here, and we'll get to that later. But I do want you to know that these are highly reliable, but they're not perfect. All right? So when we turned our charts on this morning, we were in, when we turned our charts on, the first question you always ask yourself, where am I in the 4 building blocks? All right, and the 4 building blocks, I'll go over it just briefly, is the downtrend, which consists of a push down, pull back, push down, pull back. Okay, the uptrend, which is a push up, a pull back, a push up, a pull back. All right, an instant reversal with one candle. On this one candle, they didn't bother to go sideways. They didn't make any wedges. They didn't make any consolidations. On that one candle, the market just took off. That's an instant reversal. So we have the uptrend, the downtrend, the instant reversal, and the consolidations. And the consolidations for today take on 2 forms: the sideways market like that, or a price trap, or a wedge, where the market can't make a new high or a new low. It's only those 4 things all the time, the same 4 every day. What we can't predict is which one of those 4 Legos is going to go in front of or behind the other. That's why the market appears random, even though it's only 4 building blocks. But when we turn a chart on, our job is to know which one of these am I in right now. All right? So now, are there any questions on this aspect of it? If everybody's good, I'll get another pair and I'll move on from there. All right? Now, I'm going to go back to what I normally do. I'm going to ask one person to give me a time frame, and I'm going to ask another person to give me a pair. Okay, John is saying AU, and I'm assuming that's Aussie dollar, John. And I need someone else to give me a time frame. Okay, Brishu is saying 30-minute. Brishu got there first, so I'm going to go with the 30-minute. Okay? Now, let's look at current time. Where are we right now in current time? Which one of the building blocks are we in? Okay, Sean saying downtrend. Kimberly saying downtrend. Okay, Gene is saying downtrend. Okay, good. There's one other detail. We are not in a pullback, John. We're not in a pullback, John. Okay. Excellent. Darryl hit it right on the head. Where we are right now, we just broke out of a price trap. And if you see, this was the price trap right there. All right, we were in an uptrend because we had a push up, a pullback, a push up, a pullback, and a big push up. Then we had a pullback, and now we're in a price trend. Okay, so in order for this uptrend to continue, this push up had to close above this candle. Remember that? This push up, Gene, stop being scared to say. Just say it. Say it, say it, say it. All right, and let's see. Rob is saying between support and resistance, kind of yes, kind of no. The price trap creates a bit of a support and resistance, Rob. And what we're looking at is and you didn't see the other lessons, so what we're getting at is there are 4 building blocks of price action. Oh, you're looking back a day. Yeah, we're not going back that far. We're not doing support and resistance yet, Rob. We're only looking at the 4 building blocks. And what the exercise is about is turning on a chart and saying which one of the 4 building blocks am I in right now. Because once you know which one you're in right now, that can give you an edge. Okay, so you see we're in this price trap. Now, the other thing that you'll notice is that we did not make a new high. All right, so that's an indication that we may be heading for 3 pushes down. Okay? You got that? We may be looking at 3 pushes down. So we have a push down, a little mini pullback here, another push down, another mini pullback. We may get another push down. All right, that's where we are at the moment. And if we were trading this, there are a number of different ways that we would have had an entry here, and I'll, touch on the entries again in a moment. All right, so let's do a projected profit target on this. And that would be here, and then I would put one here, and put one here. And as I said, I always come up about 10% from the bottom. So my take profit on this trade would be just about here. Okay? Now, this isn't going to happen today, let's say, because, it's a 30-minute chart. It'll take a while for these candles to form. But that's a realistic target. All right, based on what I see. Now, you see where this price trap occurred? Now, if I go back in the past, into history, I look at the top of this price trap coincided with all of these tops right here. See that? This formed a fairly good ceiling. So when I see this price trap form there, gives me a bit more confidence that this may go short for the rest of the day. Now, I did not check news, that sort of thing. There may be a news announcement. There may be one of the gray suits speaking in some other country, scaring the world to death. But in a normal moving market, this is pretty much what I would expect to happen. Okay? Any questions on that? So that was very good. We are in a price trap. And we're in a possible downtrend because we've got those lower highs now. And we also had a wedge. I'll just show you that. You see all 4 of these prices right here? You see that? All 4 of these candles hit this, but nothing could close below that line. And when we get into candlestick DNA, you'll see why the closing price is the king of everything on a chart. All right. Daryl, on a larger scale, I see a wedge. And this is what I think you're talking about, Daryl, right? You're probably talking about this wedge here. Whoop, I got the wrong tool. Are you talking about this wedge, Daryl? From here and possibly here? Yeah, you could very well be right. But again, we don't get a trade until we break out of the top of this wedge or break out of the bottom of the wedge. So this may take a while to unfold. But you are correct. All right, let me just get rid of some of these lines. Okay, does everyone understand that? What we want to do is we want to look at current price at the current market. And when I say where are we, always look at like about the last 8 candles or so. And why I pick 8 is that most candle formations, most candle patterns, most candle setups are generally 3 to 8 candles involved in creating the pattern. Okay? In most candle patterns, it's going to be a combination of about 3 to 8 candles make up the whole entire thing. For those of you that were here for the first couple of days, you know that I call this up here. This can be called either a king's crown because it's got all these spikes like the crown of a king or a queen. But I like to call it a sea creature because it looks like these are the fingers of some monster reaching up out of the ocean and pulling the ship down. Okay? But you'll notice it's a 1, 2, 3, 4, 5, 6, 7, I'd say 7 candles in this one. Most of the time it's 5 or 6. But you get the idea. So when I say where are we in current time, look back at about 7 or 8 candles and see what's there. And usually you'll see the key pattern. All right, now For those of you that are new, and I'm going to go over this, and first I just want to make sure everyone's on board with this. I want to go over briefly a sniper entry, if that's okay with the other guys. I know you've seen it before, but I want to go over it for a few of the guys that are new. The guys that have been here and seen it, I need you guys to chime in and just say it's okay. All right, because you guys have been here for a few days. All right, great. Now I'll explain what a sniper entry is. Let's assume I wanted to enter this trade. Now, I grew up, I won't say poor, but we didn't have a lot, and God bless my parents, whatever they had, I could always, I always got my fair share of whatever they had. So, I'm cheap, okay? Let's just put it that way. Let's just cut to the chase. I don't like paying a lot of money for trades. If I can catch a trade on sale, if I can get a coupon, I will use it, okay, to get a trade. But generally, on these types of breakouts, you're told enter at the close of the candle. Why is this platform? Why, it's weird why the crosshair won't come up. You're taught to enter at the close below this box, which was this candle, and your stop goes out to the outside of the box plus the spread. So in this case, we got like a 20, let's say it's a 20 pip stop for argument's sake. I would like to get into this trade spending less money. Okay? And how I do that is with something I call a sniper trade. So what I will do is I will put a line at the bottom of this box. Okay? Right there. I will mark the candle that appears to be breaking. Like once this candle sticks its nose down below here, I'll put a mark on this candle. All right? So once this candle shows me it's trying to break this box a little bit, I'll mark the candle with an X or a crosshair, which is why I call this a sniper trade. Now we're on a 30-minute chart. What I want to do is enter the same trade with a much smaller risk. So my goal is to enter a trade on a valid setup underneath this line. The setup has to happen underneath this line. Now, why do I say it has to happen underneath this line? If you look at this current candle, we're in a downtrend. So what generally happens is that, I'll explain it this way. You see this closing price? You see how this closing price is close to the high? Am I correct? That tells me that the last thing that happened was the close. The last thing that happened was the closing price of this candle, and it happened up here, near the high. That also tells me that this bottom wick was made first. That was the first piece of business of this candle, was to make the bottom wick. So when you're in a downtrend, the first thing that this candle does, its first job, is to make the upper wick. Which you see, it's made the upper wick, and now it's going to dance around for a while, and it could be 50 pips deep by the time it's finished. But the first thing it has to do, and always assume, that the new candle is going to make the upper wick first. So, the reason I want to enter this trade below this line is so that this candle can make the upper wick. Once the upper wick is made, I'm very confident price is not going to come all the way back up to this wick again. It generally doesn't happen. Anything is possible. But if I look at consistent and repeatable, that's what happens consistently and in the most repetitive fashion. Okay? The close of this short candle right here happened down here. I mean, it was the last thing that happened. So if this was the last thing that happened, 99% of the time, this top wick was the first thing that happened. I want you to understand that. So the reason I want to take a trade below this line is that the top of this candle will be done, cooked. All right, so now I'm going to mark this candle. So now we're on a 30-minute chart. I'm going to go to a 1 minute. And I'm going to look for an entry. Let me get a bit of a projection here on price. Let's do that. This was this first thrust down. And let me just copy that down to here. And like I said, I like to take a little bit off the bottom. So this would be roughly my profit target here. And we're looking at 17 pips, okay? And keep in mind, we're still looking for twice the box also. But if you wanted a place to scalp this and grab a few pips and take it off, this is another way to do it. But on a box breakout, on a price trap breakout, especially on a price trap that happens at a logical place on the chart, you will usually get twice the distance of the box. All right? But for now, we'll just use a simple projection. We'll assume that this wave down will be duplicated on the next wave down. All right? I know I said a lot. Is there anyone that's unclear about any of that, particularly the new people? Okay, great. So now let's go down to a 1-minute chart. And I'm going to take this line off so it doesn't confuse us because I'm looking for this crosshair. So let's go down to a 1 minute. And let's see if we can find that crosshair. Okay, here we go. Here's our crosshair. So what I want is a trade entry underneath this line. And as you see, we dipped up, came back, dipped up, came back. I'm looking for a full and complete setup underneath this line. Now, the last couple of days I've been saying the simple way to do it is just to enter at a close below this line and go back to your last high plus the spread. So in this case, if we were to take this entry, a close below the line, and go back to our last high, which is 6 pips plus the spread, let's make it an even 10 pips. Wow, which is way up there. Okay, so we instantly cut our risk in half. But our take profit is still that thrust down. All right? And I'm just trying to remember what the number was on that push down. Just give me a second here. Okay, so we have like a 20 pip take profit and a 10 pip stop. So we're at 2-to-1 risk reward. Does everyone see that? Okay, if we entered here, we go back to the last swing high in here, and this is 6 pips. We could have certainly used 6 pips plus the spread. I'll say a 3 pip spread, which makes it 9. I would have rounded it up to 10. So what we've done is we've instantly cut our risk in half. All right? And we're in the same trade. The other way, the more conservative way, is to wait until you get a multiple candle signal that occurs below this line. And by that I mean every aspect of it has to occur below this line, everything. Okay? So here's an example of a multiple candle setup. Here we have a nice solid push down, and here's that pullback. This candle low was higher than this one. We pop a trend line here. Okay? And we may have to adjust the trend line in real time, but then when we get a trend line break, we could take this entry here. Okay? And this is a 2 pip risk. And let's say we got stopped out here. Okay? We could still re-enter. We could still re-enter on this pullback. All right? And then again, here's our entry. Our stop loss again is 2 pips plus the spread, make it a 5 pip stop. And we're still looking at that 20 pip take profit. Or twice the width of this box, which is 15. So we're still looking at a 30 pip take profit. But now we're talking about a 2 pip plus the spread. We're talking a 5 pip risk. And we can afford to lose one. You understand what I'm saying? So we can afford to lose one and still catch the big move and still walk away with money in our pocket. So that essentially is a sniper trade. We mark that line in the sand, and remember, the whole idea is I want all this stuff up here to be finished when I enter the trade. So then what I'll do is I'll wait for like a multiple candle signal, and I want everything to happen underneath that line. I don't want any candles touching it or anything of that nature. So there are 2 ways, and the option is up to you. If you have an entry system you are happy with, use that entry system. I'm not trying to change anything you have if it's working for you. I'm just trying to show you that where you start the battle can make a dramatic difference in how the whole thing turns out. Okay? And you want to start taking the trade at a point on the chart where price action is giving you the biggest possible clues to enter the trade. And also you want to enter the trade with the least amount of risk. All right? Let's go back to the 30-minute. So that's in essence a sniper trade. All right? It's nothing new, by the way. It's just that it doesn't involve any indicators and bells and whistles, so I guess a lot of people are really not, the people that sell shit online are not really into it. They want you to buy the bell and whistle. All right? And again, you see this candle, the top wick was formed first. Let me move this out of the way. Let me move this out of the way. Top wick was formed first. In a downtrend, always assume the top wick is going to be formed first. So be a bit cautious on certain types of trades about entering right here at the close of the candle, unless your money management allows you to take a trade out at the top and it's within your risk tolerance. Okay? Any questions on that? Now, what I'll do now is if anybody has a time frame and a pair that they want me to look at, Sharon 2 is asking me to go over the price trap again. Okay, I'll do that in a second, Sharon. But I just want someone to give me a time frame. Okay, Rich is saying EuroCAD daily pullback. All right, so that's a time frame and a pair. So let's go to EuroCAD. EuroCAD. Let's go to a daily. If I go too fast, somebody tell me. Yeah, EuroCAD right now has a pullback in place. All right, and we see here we have our thrust up, pullback, thrust up, pullback, thrust up. I don't go any more after the third. That's my own personal thing. Got me? But here we have a pullback here. All right, and we also have another pullback occurred here. But now, because this is what we see in real time, this is where we are. All right, so what I'm looking for is a break below this trend line, okay, or a break below the low of this candle because it was the last touch. Okay, another question. Question, you were talking about thrusts and pullbacks. I thought from day one a thrust had to be all one color. Is that the case, or can it be black and white as long as it's a clear thrust? It can be black and white as long as it's a clear thrust, Tony. One thing to be aware of is that sometimes, like right here, you get this one candle pause. All it is a quick breath. It's not a change of direction. It just took a pause. So I would count all of this as one thrust. You could pop a trend line in here also and take advantage of it, but I would count it as a thrust. Sometimes you get these one candle breaks. The market just takes a breather. All right? And you'll be able to kind of spot the thrust, because generally what will happen is it will make, like the swing high, and then it'll also make a swing low. So you can kind of know that this thrust is done because it starts to turn back the other way. All right? But on occasion, you'll get one candle in here that will give you just a quick pause. All right? So on this trend line that we have in current time, one entry would be a break of the trend line, which could happen way up here. We don't know how many candles are going to dance around. Okay? What we do know is that this push up right now could not make a new high up here. You see that? But we did close below this old low. So this is giving me evidence that this may be push down number one. Let's measure it. Thrust down number one is 370 pips. So thrust down number two should roughly be 370 pips. All right? Every place we've seen on the chart where we had a thrust, the second thrust was pretty much equal to it. I'll do this one. And you can see within a couple of pips, dead on. And I always come in, you know, just a hair underneath, like 10%. And I can use the center of this trend line, that center dot, as a place to split the trade. Tony is saying, but the thrust is from the top of the pullback, isn't it? I'm not sure what you're getting at. This is the bottom of the pullback. I'm just trying to understand the second thrust where you drag the line to. Okay, right here, right? That's what you're talking about, yes? The second thrust where you drag the line to. No, the other yellow line. This line, Tony? Is this the line you're speaking of? Tony, if you have shouldn't you drop it at the start of the pullback? No, because I'm not looking to trade the top of the pullback, because this may not be the top. You understand, Tony? This may not be the top because we didn't break this trend line yet. This could make 4 or 5 candles up here and then turn around. Did you follow me? Until this plays out, I don't know that this is the top of the pullback. I do know that I want to enter on the other side of this line. That's why I put this here. I put this where I know that there has to be a decisive move in the market, and then I'll jump on board. I don't know what's going to happen here. This candle could go all the way up here. Do you follow that, Tony? I'm looking for points on the chart where key decisions are going to be made. You there, Tony? Okay, I'm not sure. Could you guys just type a Y or an N if you hear me? Okay, so Tony may be distracted. But does everybody understand what he's saying? Tony's saying, why didn't I put it up here, my price projection? I'm not looking to trade the top. I can't tell where the top is going to be. I'm not looking to guess. I'm looking for the market to make a confirmed decision, and then I'll take advantage of that decision. Does that make sense to everybody? What I'm looking at? I'm just waiting. I see other people typing. I just want to make sure before I move on. I'm not sure why Tony's not responding. And Rich is saying the thrust on the left is from the bottom of the pullback. This thrust is from here, roughly. Yeah, the thrust on the left is from the bottom of the pullback, yeah. And or the break of this trend line. You see we have that lower candle wick thingy? So this thrust would be like right about here. And I did it by eye because I've done it so many times. Maybe I should draw the lines in so you could see. You know what I mean? I've done it so many times. I don't even have to draw the trend lines. I kind of know where it's going to happen. So let me apologize for that, and I'll be more cognizant of that in the future. Okay? So I'm looking for something to occur below this trend line, or I just want to wait for Rich to finish typing so we can cover this. And this is my kind of trade. I like this. This is definitely one of mine because you're talking 300-400 pips, and I'm going to try to get into this with a 20 pip stop. Then shouldn't the down on the right be from the top? I did. I measured that from the top, Rich. I measured from up here, this high. I measured it from the high here down to here, down to where this pullback started. You may be overthinking it. You know what I mean? You may be overthinking it. To the top of the pullback. You're saying that this line should have been drawn from here to here? Was that what you're saying, Rich? Okay, because this is it's fairly easy to see. I'm not exactly sure what you're asking. Does everyone see, why I would draw this from here to here? The latest pullback. Okay, the latest pullback, this high is lower than this low. I mean, this low is higher than this low. That would be the latest pullback right here. Yeah, so I'm not sure what you're asking me because this candle's not finished yet. I'm not going to adjust this line until this candle's done because I don't know what it's going to do. I can't predict that. So with what I see right now in real time, this is a pullback candle. We don't know. This thing could spike down 50 pips. It could spike up 50 pips. It could go all the way up here and come all the way back and make the world's largest pin bar. There's no way I can know any of that. Houdini, I'm not. I've been called Ludini and Lustradamus a couple of times because I would pick projections that came through. All right? Rich, are you good with that? Okay, pullback candle heading back toward ascending wedge. Well, not necessarily. Let's wait more.